Okay, Chapter 6 talks about variable versus absorption costs, variable versus fixed costs. So this first problem, it says, gives you all these costs that the company incurred, and it says the company produced 200,000 units this year and sold 180,000 units. Identify the costs as fixed or variable, and calculate the appropriate cost per unit for all variable costs. Okay. So we first have to go through and identify, are these fixed costs or variable costs? Direct materials. Well, direct materials are going to vary depending on how many items we produce, right? So they're variable. I'm just going to put V for variable and F for fixed. Direct labor, again, that's going to vary depending on how many items we produce. So that's variable. Factory depreciation. Usually you use the straight line method, so that would be fixed. We talked about that in Accounting 211, so if you don't remember how to calculate straight line depreciation, go back and look at your depreciation unit in Accounting 211. It's typically the same amount over the life of the asset. Factory rent, that's typically fixed by your lease, right? $1,000 a month for 12 months. Factory utilities, that's going to be variable, right? When you get your power bill each month, it might be $200 one month, it might be $150 the next month. It depends on how much you run your heat or your air conditioning or your dryer. So that is going to be variable. Sales commissions, again, that's going to vary depending on how much is sold, right? So that's variable. Sales salaries. Salaries are typically fixed. You get $50,000 a year, no matter whether you work 60 hours a week or 40 hours a week. So that's going to be fixed. And again, administrative salaries, again, they're typically fixed. You're going to make $25,000 a year, no matter how many hours you work. So that's the first part. And then it asks us to, for all these items that are variable, calculate the cost per unit. So direct materials, we have 1,600,000 divided by the number of units produced, right? We want to divide that by the 200,000 units produced. Okay. Direct labor, again, same thing. We want to divide that by the number of units produced because the labor is what is producing the products. Same thing with materials. So 4,200, 2,3 divided by 200,000 units produced gives us $21 per unit. Then the other items are overhead items, utilities. That is going to vary depending on the number of units produced, divided by the 200,000 units produced. Okay? Oops, I think I put one too many zeros in there. It should be 30 cents. And then sales commissions. That's also going to vary, but that's not going to vary based on the number of units produced. That's going to vary based on the number of units sold, right? Because they're going to get commissions based on what they sold. So we're going to take the 3,240,000 and we're going to divide that by the number of units sold, which if we look at the problem, that was 180,000. Okay, so that's our total variable costs per unit for these items here that they've given us. It doesn't tell us to calculate the fixed overhead costs per unit, just the variable.